last time you were on the show was back in March, and at the time, you said you were very optimistic spot Ether ETFs will get approved. About 2 months later, in May, the SEC approved a rule change that would pave the way for ETFs that buy and hold Ether. And speaking with CNBC last month, SEC Chair Gary Gensler said that spot ETH ETFs should be fully approved sometime over the summer. And now, Reuters is reporting, citing sources, that these products will likely begin trading on Tuesday. What are you expecting, and what would the launch of these products here in the US mean for Ethereum and the crypto industry as a whole?
So I'm expecting so many good things. This is the beginning of a relatively long journey. We're in the early stages of what we think about as global regulatory convergence. Now, it's not going to be even, it's not going to go at the same pace everywhere, but what we're going to end up with is a model where around the world, investors through various mechanisms have access to, first of all, the major cryptocurrency and crypto assets in a variety of different ways, through exchanges, through ETFs, through individual wallets. Secondly, they'll have access to stable coins on blockchains. And then thirdly, they'll have access eventually, I think, to decentralized financial services, which are basically programmatic on-chain financial services powered by both cryptocurrencies and what we are calling real world assets. That is, financial assets or physical assets that exist off-chain and are being managed on a blockchain.
Now, according to Citi research out last Friday, spot Ether ETFs could see net inflows of up to $5.4 billion in the first 6 months since launching. Do you think that's a realistic forecast? And do you think spot Ether ETFs would prove to be as popular as spot Bitcoin ETFs?
Oh, absolutely. I think first of all, that's probably a relatively conservative estimate. I don't like to get into forecasts in the very short term. I tend to think more about the sort of super long term. When we think strategically about the total long term, we see a kind of market for tokenized Ethereum based digital assets in kind of the tens of trillions of dollars. And so for Ethereum, I think that means it's going to be, there could be eventually hundreds of billions just on that one crypto asset. Over in Bitcoin, we see a close analogy to gold. Bitcoin is now like, a bit over a trillion. I think about the gold market cap, which is in the range of $14 trillion. And I think those things might be comparable over time. But when I say over time, I mean like 20 to 30 years of inflows and institutional investment, not 6 months or 12 months.
So, do you think the approval of spot Ether ETFs would open the door for other spot crypto ETFs? Late last month, VanEck became the first asset manager to file an application for a spot Solana ETF in the US. And this month, SIBO filed a request with the SEC to list ETFs tied to the cryptocurrency. And now the agency has 240 calendar days to decide whether to approve or deny the 19B4 applications to list the products from VanEck and 21 shares. So what do you think will happen there?
So this is a good example of how there's some level of unevenness in the global regulatory conversion. So this week I'm in Europe. I was here last week for the ETHCC conference. That was in Brussels. I met with European policymakers. Europe has a regulatory structure called the Markets in Crypto Assets Infrastructure, and that provides a legal framework for almost any kind of crypto asset to be transacted kind of under a legal model and protection. We don't have anything as broad as that in the United States. So individual circumstances can affect significantly the applications. And I cannot predict how the SEC will react to a Solana application compared to how they reacted to Bitcoin and Ethereum. But there are really substantial differences between these different networks. Bitcoin and Ethereum are kind of, in addition to being the OG networks and very big networks, they're also much, much more decentralized than the Solana ecosystem, and they have kind of different technical requirements. You might see, and they have different sort of total market caps and liquidity, so you might see a different response from the SEC. I have no way of forecasting what that response is because unlike the EU, there isn't kind of a general framework specifically for crypto assets out there that makes something like this highly predictable.
That makes sense. And of course, we'll talk more about regulation in just a bit. But last month, EY Parthenon research revealed that institutional investors have increased allocations to digital assets and crypto related products and plan to continue to do so. It also showed that there's growing interest for investing in tokenized assets to drive portfolio diversification. What does this signal to you, and what else stood out to you from the research?
So a couple of different things. The first thing this signals is this is basically, it's kind of trickle down investing strategy. So if you were to go back 12, 18, 24 months, we were talking to family offices. These are people with hundreds or hundreds of millions of dollars of assets. I would say, and I'm speaking a little bit anecdotally, 100% of family offices had some crypto, right? And they're getting more serious about that over time. That's moving into the general kind of investing mainstream. So I think the first key takeaway from my colleagues over at Parthenon is there's nothing about crypto assets or tokenized assets that is a fad. Like anybody who sees that anymore, that viewpoint is out of date. And Larry Fink from BlackRock, who was on your CNBC just the other day, was saying, I see Bitcoin as a legitimate asset. I see this comparable to
That's
gold.
right.
We're tokenizing on Ethereum. I mean, what he said, the stuff he said was music to my ears, although I was a little upset that I feel like he stole all my talking points like 3 hours before I got to make them in my other discussion. But I get very excited about this. The thing that people should kind of keep in mind and have a little bit of caution about is more money into crypto and blockchain is not a rising tide that lifts all boats. I believe we will see investment markets behave in relatively similar ways. And what I mean by this is, let me give an example from the world of precious metals. Gold is $14 trillion, 13 to 14 trillion in market cap. That is more than 10 times larger than the next largest precious metal, right? And when investors want to go into precious metals and as a hedge for inflation, for example, they buy gold. They don't buy generally palladium or silver or any other sort of specialized precious metal. I think we will see the same kind of behavior in cryptocurrency. Bitcoin is digital gold. It will behave like digital gold, and I think it will be as dominant to other crypto assets as gold is to other precious metals. Similarly, Ethereum has become the dominant kind of tokenized asset and smart contract platform. I think there'll be kind of a similar effect there, where the Ethereum will soak up more than 90% of all these tokenized real world assets that companies like BlackRock and others are talking about deploying.
Now, the research also found that the lack of regulatory clarity and a perceived lack of trusted partners in the ecosystem are still likely barriers to growth and adoption of crypto and tokenization. Since we last spoke, we have seen some regulatory advancements here in the US. In fact, in May, 71 Democrats joined 208 Republicans in voting yes for the Financial Innovation and Technology for the 21st Century Act, a crypto market structure bill. What do you make of that development, and what does that signal to you?
What it signals to me and what makes me very hopeful is that cryptocurrency and blockchain in general remain a bipartisan political issue, right? When we look at things that are highly polarizing, they don't necessarily advance very well in this kind of 50-50 political environment we have right now. When you look at stuff that's bipartisan, there's much more room for growth and compromise. So, without taking any one particular sort of political party or viewpoint, I would just say it's really, really important for the health of the industry in the future for people from both parties to be able to cross political lines and agree that this is a technology that we should have. These are financial markets that we should have, that we are better off having these innovations in the United States and out of the United States, for example.